Hello dear crypto friends, and welcome to today's video in which we are going to take a look at Bitcoin, at the crypto market, and also we're going to talk about altcoins. Are the good days of altcoins over and now actually altcoins are getting too risky? Let's try to find out. And we always start with the Bitcoin chart because the basis is always Bitcoin. No matter what we talk about, the basis is always Bitcoin because Bitcoin always gives the direction for the entire crypto market, right? And we are in this boring sideways movement, still not much happening. Yesterday it seemed as if Bitcoin was going to break out. We had this nice daily candle, it started pumping and then bam, it started going down again. Nothing amazing has happened. We look at the Bollinger Bands, we still didn't manage to break out through the Bollinger Band. We are just going in this sideways movement, this boring sideways movement, which I often compare to what Bitcoin did from May to July 2021, right? It was doing this sideways pattern, and it really looks as if Bitcoin wants to repeat that boring sideways action. So we should really not be surprised if Bitcoin decides to wick down once or even twice and then continue pumping. You know, we shouldn't be too surprised if that happens. And if I load the moving average of 200 weeks or 1400 days, what do we see? Well, we see it's rising and rising, it's going up, and we are not so far away from it anymore. So we see how close we actually are to the weekly moving average 200, and we know that historically this has always acted as a long-term support for the Bitcoin market. So could we wick down to the MA200? Well, of course we could wick down to the MA200, right? It's not impossible. I think it won't happen, but can I exclude it? Of course, we cannot exclude it. This is clear because long term, the MA200 has acted as solid support because even though the RSI, the weekly RSI really is very low, as we can see here, it is not excluded that we could revisit this weekly moving average of 200 weeks. But now, of course, we know that Bitcoin is correlated to the Nasdaq. So let us look at our good friend Nasdaq. What is the good friend Nasdaq doing? Hey Nasdaq, hey, what are you doing? Okay, it is starting to pump a bit. That is not bad, and it looks as if this will continue to go up. But of course, the Nasdaq alone is not enough. We also want the dollar index to dump, and as long as the dollar index doesn't do a nice second leg down, as long as that doesn't happen, we shouldn't be surprised if Bitcoin is absolutely not pumping, because Bitcoin is just brutally anti-correlated to the dollar index. Now let us look at our 2-year bond yields, the US government 2-year yields. Why are they so important, friends? Well, because they decide over the monetary policy of the Fed, and we saw that as soon as the 2-year yields started pumping, that was the time when the Nasdaq actually started going down. We look at the long-term chart of the 2-year yields. We see they are in a descending trend channel, right? Here, 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 and now we are at resistance. Now we are back at resistance, and we want the 2-year yields. We want the 2-year yields to turn around here at resistance and go down again, because that would of course lead the American stock market to pump. Consequently, the Nasdaq, Dow Jones, SP 500 would all pump, and since Bitcoin is positively correlated to the stock market, then Bitcoin would also pump. So what we don't want to see happening, friends, is that we get a continued pump now of the 2-year yields and that they break through this resistance and revisit the old highs. We don't want that to happen. We want them to turn around and go down. We want them to roll over, go lower, because if the yields go lower, then the Fed will not be as tight with their monetary policy, and then the stock market will go up, and then crypto will also go up, right? But now we look at crypto and we say, yeah, that's very nice. We want Bitcoin to go up. But the times when Bitcoin was doing 100x or 200x, friends, let's be realistic, those times are over. Let us look at the long-term chart, right? We see the first pump from the lowest lows of Bitcoin to this top here was like a factor of 3000. That was pretty insane. The second, we still had an incredible factor 625, right? And then from this low to this high in the third cycle, we had a factor of 126. And then from this low to this top here, we already had only a factor of 21. So it appears that the factors with which Bitcoin is pumping every cycle are decreasing. This is the law of diminishing returns. It's clear that an asset that grows a lot bigger cannot give us back the same returns which it did when it was still very small. And even from the lowest low, if we say, okay, Bitcoin now goes to 200K or something, right? It goes to the upper resistance line of this trend channel. Even then it would be only not even 100x, like from 2018, like from late 2018, if it would go to the top of this channel now, it would not be even 100x, which would be less than what it did from 2015 to 2017, okay? So people are therefore hunting altcoins because altcoins are giving a nicer potential return of invest. But friends, what problem do altcoins have? The problem with altcoins is they are getting more and more with a crazy speed. When I started with Bitcoin in 2013, there were only a few altcoins. The coin market cap was really, you could go on coin market cap, you would have one page on coin market cap because that was all the coins that existed. Believe it or not, it was insane. And now you are on coin market cap and you have like page 1 to 101, rank 10,030, and that's not even everything because new coins are being created all the time. So the problem is we have more and more coins, but how many people do you think are entering the crypto market? Do you think we have now 10,000 times more people than 5 years ago? I think not, okay? The problem is I don't think so, because if we go... So in order to find out if altcoins are really getting more risky or not, we need to make a small, we need to think for a bit what that means actually. So we have now more people in the crypto market, right? The crypto market is growing, more and more people get in the crypto market. And what would it mean if altcoins are getting riskier? That would mean that there are overproportionally more altcoins than a new influx of people can sustain. So if, for example, within a time span of 5 years, say the number of altcoins 100-folded, but the number of people that entered the market in this time only 10-folded, that would be a 10-fold overrepresentation of altcoins with regard to people. So that would mean altcoins are watering down. We don't have enough people to sustain buying all these new altcoins that are being created, okay? And we have here, for example, a number of people from Statista, from blockchain wallet users worldwide, which should be a pretty good indicator, or at least proportional to the number of people that are entering the crypto market, right? And let's just go back to when we had actual data that is pretty low. Let's say January 2014, because then we had 1 million blockchain wallet users, okay? January 2014, 1 million. And now we go to January 2022, right? January 2022, 81 million, okay? So in 8 years, we had an 80-folding. In 8 years, 80 times more people are now in the crypto market as, well, 8 years ago, as in 2014. Now we look at the number of cryptocurrencies worldwide, right? In 2014, we had 506 cryptocurrencies. And now in 2022, January 2022, we have about 10,000, okay? So this is a 20-folding. So this means we have 80 times more people in the crypto market, but only 20 times more altcoins, right? Only 20 times more altcoins. So the influx of new people is outweighing the increase that we are seeing of new altcoins in the market. Believe it or not, it is insane, because there are so many new altcoins created. We think like, man, this is crazy. This is absolute insanity. But the new number of people that are entering the crypto market is actually rising faster than new altcoins are being created. So I think the risk of altcoins is not increasing, okay? It's more altcoins, so you need to diversify your portfolio more than, of course, 8 years ago, right? So we need to see it proportionally. In 2014, if there are only 500 coins, if you have 5 different coins, you have already 1% of all altcoins. With 5 coins, you have 1% of all coins. If you buy 5 coins today, you don't have even 1 per mil of all altcoins, okay? So you need to buy a lot more altcoins. You need to diversify a lot more, of course, than you needed to do in 2014 if you want to lower your risk in the altcoin market. So in 2014, if you had 5 coins, 10 coins, that was okay. Nowadays, you should probably have like 10 or 20 times more coins just to lower your risk in the crypto market. Just to lower your risk, because if you don't spread yourself over enough coins, if you don't diversify enough, you are having a high risk. Because that here is, for example, a very interesting chart I found on Twitter. So you have the top 2,412 coins, and in the x-axis we have time. We have these black points which represent the Bitcoin price chart. Here on the right y-axis is the BTC price, and on the left y-axis we have a performance multiplier indicating the performance of altcoins with regard to Bitcoin. And we see that in the beginning years, after the altcoins were started, I think the first one was Litecoin, then afterwards XRP, then more and more and more came onto the market. And in the beginning we see the vast majority of the altcoins are above this red band, and this red band is the performance multiplier of 1. So a coin that is on the red band performs exactly the same as Bitcoin, has the same performance. We see that most altcoins in the beginning years of the cryptocurrency market are above the red line, only a few are below, right? And as time passes, what do we see here? More and more altcoins are actually converging from above, but also from below towards this 1 multiplier. This means that we have more and more altcoins that are actually not performing better than Bitcoin. Now, why would that be, friends? Let us think, why would that be? Well, I can tell you why, because you now have more people, okay? But those people, they only chase the few hype coins. There are a few hype coins now, like Shiba Inu, Dogecoin, and I don't know what else. Terra Luna was maybe a hype coin, I don't know. We have those hype coins, right? And people are chasing them because why? They want 100x, 1000x, 10,000x. I'm disappointed if I have less than 500x, right? They chase those coins. So what happens? More and more coins are not being bought. So you have now a few overperformance, but you start having underperformance because nobody buys them anymore. You have really a disparity between hype coins and underperformers. So now what happens, that coins that actually were really all pumping in the beginning days because everyone was buying random coins and they just all pumped. Believe me, you could buy anything back in the day. In 2014, 15, you could buy any coin. It was almost a guarantee that it would pump when the next Bitcoin bull market would come. But now we had the first time that coins did not pump as much as Bitcoin. Dash underperformed with regard to Bitcoin. XRP underperformed with regard to Bitcoin. Litecoin underperformed with regard to Bitcoin, and many others actually. Those were just a few examples, but many altcoins did not perform as well. So now we have the problem that because we have so many altcoins, yes, there are more people than altcoins, but still, the people, they don't buy thousands of altcoins. Do you think they will buy 10,000 altcoins? No. People buy 5 altcoins, 3 altcoins, 4. So that means we have many altcoins that are dying, that are slowly dying, and only a few that are performing nicely. So that means the altcoin market is more polarized between super high performance and really bad performers. So you need, in order to compensate for that, increase your portfolio. So you need to have really a lot of coins to make up for that effect. You have to have 10 times, 20 times, 50 times more coins than you needed to have back in 2014 in order to compensate for that effect. That was my word on altcoins, friends. It is the sad reality of the times that we live in. Altcoins are not necessarily a guarantee anymore that you will have better performance than Bitcoin. You need to really have a lot of altcoins in your portfolio to be on the safe side. If you are running an altcoin strategy and you want to make money with altcoins, you need to have a large portfolio, because if you have only 3 or 4, the probability is unfortunately very high that some of them will not perform well, or if you are unlucky, all of them will not perform well. So you need to accommodate for this effect. That was what I wanted to show you today. This is a fascinating effect in my opinion. I will keep you updated on the developments in the crypto market, friends. I will make many update videos. If you found this interesting, please subscribe to this still small channel, and then see you in the next video tomorrow. Bye!